What happens when traditional finance quietly starts buying an asset that retail investors have completely abandoned? Right now, Polkadot is the ultimate contrarian setup. On-chain, the data suggests this network is a ghost chain, severely lacking organic users. But off-chain, the fundamentals have radically shifted. Wall Street officially launched the first Polkadot exchange-traded product on the Nasdaq, and the protocol permanently slashed its token emissions by 53%. We are staring at a massive divergence between retail apathy and smart money accumulation. Today, we look at the raw on-chain metrics, the exact institutional inflows, and a very specific technical breakout happening on the weekly chart right now. I'll walk you through my exact trading strategy, where I place my invalidation levels, and how I manage risk in real time. Let us step into the data. Right now, the price of the DOT token is sitting between $1.55 and $1.65. If you look at social media sentiment, the consensus is entirely negative. Most of the retail market capitulated months ago, completely exhausted by the relentless downward price action. But as data-driven investors, we know sentiment is a contrarian indicator. What actually matters is market structure and liquidity. We are at a highly specific juncture today. The macro environment is currently dictated by Bitcoin that right now is testing the resistance of a bear flag near 75,000. If the breakout is confirmed, the main target shifts to the CME gap between 80 and 82,000. A major rejection here could easily drag us back to the 67 region. For the broader market to sustain upward momentum, Bitcoin needs to hold the $75,000 level as structural support. If that happens, capital rotates. And this brings us back to Polkadot. There's a fundamental catalyst that just occurred that alters the tokenomics. But there's something buried in the technicals that might flip the bearish narrative. Let us look at the fundamental realities, starting with the supply mechanics. Last week, on Pi Day, March 14th, the Polkadot OpenGov community ratified a structural change to the issuance model. For the first time, Polkadot has a maximum hard cap of 2.1 billion tokens. Roughly 80% of that supply is already in circulation. But more importantly, the daily emission rate of new tokens was instantly reduced by 53%. Looking at the projected 50-year issuance curve, we see inflation dropping sharply toward a 1 to 2% range long term. By cutting inflation in half, the mechanics shift from dilutive to increasingly scarce. This upgrade coincided with a major traditional finance milestone. The first United States exchange-traded product for Polkadot, under the ticker TDOT, is now live on the Nasdaq. Launched by 21 Shares and Falcon X, we have proof of institutional demand. Between March 6th and March 17th, we saw a cumulative total net inflow of $500,000. While modest compared to Bitcoin and Ethereum, it proves traditional family offices are allocating capital to Polkadot without on-chain custody friction. However, we must balance this optimism with the reality of on-chain metrics. Looking at the telemetry data, the network boasts elite security, maintaining 600 active validators, ranking 6th globally, and a consistent 6-second block finality. It also retains massive developer brainpower, ranking 4th globally with 93 active core developers. But despite the elite infrastructure, organic utilization is abysmal. Over the last 365 days, Polkadot averaged a mere 2 transactions per second, ranking 31st globally. With roughly 38,000 monthly active users, it ranks 28th globally. Furthermore, decentralized finance integration is shallow. There is an Ethereum to DOT liquidity pool on the Uniswap base network, offering a 30% annual percentage yield, but the total value locked is under $600,000, and algorithms predict that yield to fall below 24% within 4 weeks. Polkadot is transitioning into a hard-capped institutional asset, but retail is non-existent. Now, let us translate this fundamental divergence into price action. Looking at the DOT weekly chart, we identify a clear market structure. Since last September, price has been trapped inside a falling wedge defined by the white dotted lines. For months, price action has been getting tighter, severely compressing volatility. Currently, we are witnessing a critical structural shift. The price is breaking out of the falling wedge resistance to the upside. On the daily timeframe, we have a confirmed breakout. However, we still need the weekly candle close on Sunday to confirm the macro move. It's also important to close a daily candle above the last local high of $1.67. It's perfectly fine if the price gets rejected on the first attempt, as long as it retests the wedge as resistance and does not re-enter. If we anchor a Fibonacci retracement from the low of $3 back in June 2025 up to the local high of $4.88 in September 2025, we identify our key technical zones. The deepest support, 2618 Fibonacci extension, sits perfectly at $1.37, our previous macro bounce zone. Looking overhead, the price remains below both the 21 exponential moving average, the red line, and the 200 simple moving average, the green line. If this breakout is confirmed, the immediate target is the 1618 fib level at $2.23. Beyond that, the price will inevitably collide with two major descending trend lines drawn in orange. The first comes from the local top of $11 back in December 2024. The second originates all the way back from the all-time high price of $55 in 2021. To support the breakout thesis, look at the Heikin-Ashi Relative Strength Index indicator at the bottom. It's bouncing out of the oversold region and heading toward the neutral zone. It's pointing up and has formed a clear bullish divergence compared to the price action, indicated by the yellow arrows. I also added a descending orange dotted trend line on the indicator to show where a momentum trend change will happen. My personal strategy has evolved. In my last video on March 5th, my plan was to wait. I said I would not make any decisions on the short-term bag until there was a close that broke the wedge. If it broke down, I was going to open a hedge short position when the wedge was retested, purely to protect my long-term spot bag, which remains intact at an unrealized loss. I refuse to liquidate there because it represents a small portion of my portfolio. Now that we have broken to the upside, my strategy flips. I have added a small bag here for dollar cost averaging and pure speculation. I think this cut in the inflation supply narrative could push it up to at least $2, but that depends heavily on Bitcoin. The risk-to-reward ratio is highly compelling but requires strict execution. For my take-profit targets, which include both my short-term and long-term bags, I'm looking at the green circles on the chart. My specific targets are $2.20, $3.60, $4.80, $7.50, and finally, $11. To manage risk, I employ a strict trailing stop system. If the price achieves target 1, my stop loss immediately moves to my entry price. If target 2 is achieved, the stop loss moves to target 1, and so on. This systematically locks in yield and entirely removes downside risk. The invalidation level is simple. If the price falls back inside the wedge and breaks below $1.37, the entire bullish thesis is dead for a while. So, Polkadot has a confirmed structural supply shock and a new institutional on-ramp via the Nasdaq, matched against a technical breakout. But if the broader macro environment falters, this breakout turns into a fakeout. DOT is transforming from an abandoned retail chain into a hard-capped institutional infrastructure asset. And the market will always test your patience before it rewards your conviction. If you want to trade these setups alongside me, the Pro Capital Discord officially opened today. We already have our first members inside, and I just dropped a full step-by-step guide on exactly how I'm earning 8% yield on USDC over on the Base network, plus an exclusive airdrop farming strategy. If you want to step into the war room, view my exact portfolio in real time, join our weekly live audio sessions, and execute side-by-side with serious investors, click the join button below to become a channel member, or find the link in the pinned comment. Just sync your YouTube account with Discord, and all the private vault channels will unlock. Remember, none of this is financial advice. Be sure to watch my previous Polkadot video to understand my complete historical thesis, and check out my recent Bitcoin macro update to track overall market liquidity. Hit the like button, subscribe, and I'll see you in the next analysis.